Hello everyone, I am Dr. Eric Morrison. This is 7Honor3, and I'll be covering trading education using the TC2000 and TradingView platforms. Welcome you to our midweek review. It's our kind of a Zoom beer call going forward, and I did email you some specific questions. I basically reviewed all your video podcasts, and we are both honored and humbled, to have you here at our group, and just kind of want to go through not necessarily your history, because I've seen a lot of the podcasts where they ask, okay, what did you do the past 20 years? What were some of the famous books that you read? And I mean, all great information. But some of the questions that I sent you ahead of time in read ahead, if you want to cover them, we can go over there one by priority or whatever. But we would like to see some of your wisdom going forward in terms of how you actually do your positioning. After this conversation, we just kind of wanted to show you a technical indicator that I created. It was actually by accident, and what it does is it actually predicts market turns. It's called Follow the Money, and it's basically on the valuation of the open and close of that particular candle, and it shows a past history of market moves there to determine whether or not the market is actually turned or not. But well, I have a couple of guys that are online, and I got Worth Burris. He's online. You can see him. He's my tech guy. He basically set up. He's been with me for 3 years. He's fantastic. One of a good friend. And then I also have Ben Abernathy here too as well. He's a very young guy. And I think you're working out right now, Ben, out of the gym. But do any one of you have any questions for Jason at all?
I have a few questions. Jason, if you have a few minutes or...
Yeah.
I read a few things where it said you've managed a few $100 million. Is there a liquidity amount that is a max amount that the futures can support in terms of how many contracts per trade, per time frame you can trade without being stop hunted? Or
I mean, certainly on some smaller contracts there are, and a lot of those smaller contracts like cocoa, not even cocoa. Cocoa has liquidity, but some of the meats and like orange juice and lumber, I trade a quarter size than I usually do on other things on those, just because there isn't the liquidity. But for the other stuff, stocks, fixed income, currencies, even the metals or the energies, and even the grains, it's in the hundreds of millions of dollars before you're going to run into any kind of liquidity situation.
I see. So the portfolio can support hundreds of millions, it sounds like, overall.
I mean, I ran $700 million at one point, and
wow.
I never had an issue. I run less than that now, and I'm never going to run that much again because I have no interest in doing it. I don't even take any new assets anymore. I have some clients that have some capacity that they're allowed to take up with me if they choose so. So I could get up to like maybe 400 million or something like that, but I'm not doing any more than that. I'm not taking more clients. I'm not, you know what I mean? It's stupid at this point. I always say when I was 30, I wanted to be a billionaire, and at 56, I just want to be left alone. So,
is there do you have to run at a certain point? Do the strategies entropy that you've seen with a certain amount of liquidity or contracts, or like on daily candles or weekly candles?
I don't think so.
You don't think so? Okay. Are there any contracts where it doesn't work as well, like some of the newer contracts, the COT report, like Bitcoin or some of the smaller contracts?
I don't trade Bitcoin.
Okay.
One of the reasons being that there's not enough history for me to test. It's a bad test because it's such a small amount of time. But recently, the COT has shown a humongous long position in Bitcoin. And so I've been saying, hey, here's a great here's a great test, right? Because here we go. This is the longest the specs have ever been in Bitcoin. So let's see what happens, And guys have said to me, oh, well, I've looked at it, and it looks like the large specs have actually been the best in Bitcoin. They've been long at the bottoms and short at the tops. I'm like, okay, maybe that's true. You know what I mean? Like I don't take it personally. If that's true, that's true. I don't think there's a long enough history to test it. I don't know that these people are necessarily looking at it correctly. COT can be a very strange thing when you look at it, right? I always say it's not a great predictor over time, but it is a great risk manager over time, right? So, but it's kind of an interesting laboratory right now in Bitcoin because we've seen people get very long here. So let's say if it goes straight up from here, then, you can start saying, hey, maybe, that's how COT works in this, or maybe it's just a coincidence. You know what I mean? I mean, look, they've been super long heating oil and heating oil's kind of gone up. So, you can make that same argument. I have losing trades all the time. Does that mean that COT works better the other way? Should I be doing the opposite of what I'm doing because I have losing trades all the time? It's very difficult to decipher. What I know is I've been doing it for over 20 years and it gives me the return stream that I need. So that's what I do. I've had many people over the years tell me, oh, COT shit. We've tested it. We've looked at it. It doesn't do crap. And I'm like, okay, so don't use it. Like, I don't know what to tell you. You know what I mean? I think that trading the 200-day moving average is shit, but a million people do that too, right? So it's all about the discipline of how you handle it. I think you can trade any way you want. If your discipline is right, you could probably make anything work.
Yeah. Is there a maximum portfolio heat that you have? Do you ever trade? Have you ever traded, I guess, more than 10% total portfolio heat or 15% total portfolio heat, across 15 positions or something? Or is there a max?
If it ever gets to that point, I don't think I've ever had 15 trades on, but I'll get to a point sometimes where there's 7, 8, 9 on. But that's when that happens, that's a very good thing. Because I'm not going to get all of those signals at the same time. I'll get 1 or 2 signals at the same time. So if I have 9 positions on, it probably means that 6 or 7 of them are working. That's the only reason they're still on, right? They would have been stopped out by now, right? Otherwise, so if I have 6, 7 positions that are already working and I get 2 more on, then okay, now I have 9. It's usually a very good thing for me because it means I have a bunch of positions that are working. I don't think I've had more than 5 positions on in 2 years. So
okay. Do you have the average R multiples that you get per trade, or that works?
I don't know what R multiple is.
I guess
four times. Sometimes you make four
times, yeah. 5 times your risk.
Yeah. The average has been about somewhere between 4 and 4.5 to 1 for the winners.
And with your exits, one thing I noticed with the COT is it'll only shift a few percent per week. Is there how do you determine your exits when the signal is no longer valid?
So I turn my COT data into an oscillator, which obviously goes from 0 to 100. So if I'm buying because it's at 0, meaning everybody's short, then when that oscillator goes back to 50, that's when I get out. And with testing, what testing has shown over time is that if I bought it at 0 and I caught it right and the market starts to go up, then what I should do if I want to maximize my profit is wait until it goes all the way to 100 and I'm getting a sell signal and get out up there. Right? That would maximize my profit. But what it has also shown me is that once it gets past 50, and there's a few answers for this, but once it gets past 50, the volatility of those returns goes up much more than the extra return that I'm getting, right? So my Sharpe is going to go down at that point, A, which I don't like. But B, when it gets to 50, I mean, you can take the dollar, for example, right? So we were getting, and I'm sure you saw it in COT, we were getting massive buy signals in dollar in mid-July, right? Short euro, short British pound, all that stuff, right? So, and this was a phenomenal trade, right? From a risk return standpoint, this thing was 20 to 1 from what the risk would have been if you had gotten short euro. The signal on euro, for example, was on July 18th, okay? So the close was 112.64, the high was 113.11. So you're risking half a point, right? So this thing's gone from, you're risking half a point, it's gone all the way down to 105. So you made, what is that, 7 points on risking half a point? That's 14 times your risk. That's a massive trade for me, okay? That's a year. That right there takes care of 14 losses, right? So that essentially covers all your losing trades for the year. So everything else is gravy, right? But at this point now, all the people who were long euro are now getting out. So I'm covering, right? I'm getting out, right? And the people that are getting now short euro are trend followers. So like I say, back to my clients, they have trend followers in their portfolio. So this is their job from here, right? They're supposed to trend follow it from here. I did my job. I caught the turn. I got it back to now the positioning is neutral, which means the trend followers are either getting out of their longs or most likely getting short here. So now they can do their job. They can have, and it shows you, because they'll get short here and they may make money, but if they do, they're going to do it on a much more volatile manner than I do, right? And that's because, like I say, from here, the volatility goes up a lot. So that's why I do it that way. It all fits into what my process is and what I'm trying to do. What am I trying to do? I'm trying to take advantage of the market is super crowded, right? And therefore, there might be a big move the other way. It doesn't guarantee it, but if there is a move, there's a good chance that there's a big move the other way, right? Because of this exact reason. They're all long. It starts going down. They all start getting stopped out, right? Exactly what happened with the euro, right? So once that's no longer there, then what I was trying to do is done, right? I can't argue now that they're all super long anymore. So therefore, that's not what my process is, So it's all
still long.
Everything is just a function of process. They're still kind of long, yeah, but on my indexed level, they've gotten back to neutral. So,
okay.
So I'm out, right? But they are still kind of long, yeah. But from here, it's a trend following trade. So let the trend followers do that. I did my thing. They do their thing. Everybody do your job. Like I say, I'm the defensive end. You're the linebacker. You're the cornerback. Everybody do their job, and as a team, it should work, right? So that's my job. That's where I get out. Would it be better if I'd stayed short? Well, it's on new lows, so clearly it would have been better if I'd stayed short, right?
Yeah.
But that's all in retrospect. They can get short here. Do I think that it's going to continue to work? I mean, based on the fact that I'm so bearish freaking bonds here, right? Yes, I think the short euro is going to still work, but is that going to affect whether or not I'm going to keep the trade on? No. I'm just going to follow what I do and give my clients what I'm supposed to do.
Are there specific contracts you don't trade because it's harder to follow the news, or it's just too small of a market, like orange juice or something like that, lumber, or that you don't include?
I have them on my list of things that I can trade, but if I can't get the news, then I won't make the trade. And sometimes that's a good thing, and sometimes that's a bad thing. I mean, we've been having arguably signals to get short cocoa for quite a while, right? And you can see that cocoa's gone from 3,800 to 3,400 in the last 2 weeks. Now, I missed that trade, right?
Yeah, September 18th was the actual turn.
Right, so I missed that trade because I didn't have any kind of news failure thing. I don't know what the news is on cocoa, and so I missed that. But having said that, it's been showing set up since, July, so I also missed that. I mean, there were a couple reversal days there that looked like you could have sold it, and it turned around and made new highs a couple times, right? So I missed that as well. So I don't mind, sometimes you don't get everything, what I mean? Sometimes you miss it, you don't get everything. Not all of my trades work. Not every turn gets flagged by COT. Markets turn without the COT being crowded. Sometimes the COT says crowded and the market doesn't turn. That's just how it is. You know what I mean? But if I stop out of the ones that don't work quickly and I ride the ones that do work, then over time, hopefully, it's going to work. Like I say, I play my game, and there's other games to be played. But I just play my game.
When you allocate your capital to different contracts, do you have a particular set of indicators or something for co-correlation or inverse correlations or risk on, risk off, or something like that to hedge? I
used to run value at risk and stuff like that, and I found it to be shit. So what I use now is this. I watch all day. I'm watching correlations all day. I'm paying attention to what the story is behind those correlations all day. I'm watching for changes in correlation all day, right? So, I could sit here and talk about the correlations and theoretically why they are happening right now. U.S. rates going up, dollar going up, gold going down, right? There's the correlation right now, right? Yeah. So if I were to hedge, I would be using those until I see a break in those correlations. Let's say bonds go down, dollar goes up, and gold stops going down, right? Well, that's interesting to me, right? And therefore, I might start thinking about it in a different way. That's really what's interesting to me is when markets do what they're not supposed to do. When they do what they're supposed to do, I don't really see the edge. All you're doing at that point is trying to predict what the future is going to bring tomorrow, right? In terms of the news flow and what's going to happen, right? When they do what they're not supposed to do, that shows interest to me. And I've been saying that. That was what I was actually saying in my report this week was, to me, the obvious thing, and I hate to say obvious because it'll turn on a dime against me, but I've been saying this for months, right? As I think the videos you've seen have shown, is I just have been so resolute in the idea that the long end of the curve was going to get crushed, right? And it is getting crushed. And now it's really getting crushed. So I think that any trade that you want to put on, whether it's long stocks, whether it's long, whatever it is, has to prove first that it can withstand higher interest rates before I'll put it on, right? So today, stocks did that. Now, in fairness, on Monday, stocks did that too, and it meant nothing because on Tuesday, the stock market went right back freaking down, right?
Right.
So again, things don't always work. But I would not do anything right now I would not get long anything right now that can't prove that it can't go up while interest rates are going up. Now, you know what has proven that it can go up with interest rate going up is crude oil, right? Crude oil has been going up for months here while interest rates have been going up, right? So there's something. I can't get long it here, but because I'm actually looking to get short that shit. But
it's crowded out long right now, 80%.
Right. But if you were looking to be long crude, you'd have my approval. Other than the COT, you wouldn't have my approval. But from a tape reading point of view, right, this thing has clearly proven it can go up with interest rates going up, right? So gold, for example, let's say you want to get long gold for whatever reason, right? I cannot condone getting long gold until it can prove it can go up while interest rates are going up.
Right.
So, and that hasn't happened yet. It hasn't happened yet. It keeps going down every time rates go up. Gold keeps freaking going down, and until it can prove that, I don't think you trade it.
We did.
So you
did trade gold short on that, and that was actually a good trade, but it was also crowded out long, 70% and 63%. So this was a good trade today.
Good.
Gold short, but when I was looking at the 10-year there, Ben, and I think this is something that I'm really concerned about, and I'd like to get your thoughts on that there, Jason, is right now, within a month, we've almost went up half a percentage point on the 10-year. The speed of which this thing is going up, does that concern you, or does that have any kind of calculus in your analysis approach at all, or no?
It does not concern me from a trading point of view, because it is what it is. If you want to sit down and have a beer with me and let me tell you how the world is about to end, it concerns me from that point of view, quite frankly.
He's increasing the fear in me, and it's like, should I even be trading at this point, and that kind of thing.
Not, you know what I mean? That's not a good thing to do. I am fading mass consensus, right? So everybody who's in mass consensus, which is by definition most people, think I'm backhanding them personally. But I'm not backhanding them personally. I'm backhanding them all as a group, right? Because I think that they're making a mistake, right? And the more they argue with me and tell me I'm a moron and you don't know anything about how fixed income works and the world's about to crash and therefore there's going to be a flight to quality, I hear that from 100 people a day. So I keep putting on, Twitter, like, I guess we have to wait another day till the flight to quality because it certainly didn't happen today, right? Which I'm not. I'm ripping into 5,000 people personally. Because they're all saying that, right? He wants to take it personally because he does say that, but so does 5,000 other people. And everybody's saying it, which is why I'm taking the other side, right? So,
well, we lived through the 80s. We know what the high interest rates will do and all that. I guess my question is a little bit more specific is, because it's a different set of circumstances, and probably better on a beer call, but just the overall markets, what I'm trying to defend against is a black swan event, and that's kind of hard, when you're looking at, a lot of things going wrong or a lot of firsts that you've never seen before, and that kind of thing.
But the truth is, it's not that hard because the market is showing you, right? The single best place to hedge against a black swan event right now is short TLT. Okay, that's the bottom freaking line. And I had a big argument with this. One of the places I manage money for is a multi-strategy hedge fund. Okay, and the risk manager who has got 10 PhDs, and is a lot smarter than I am, right? They have he has a book that he's allowed to trade in to hedge the portfolio. So he's going through it and he's like, oh, the risk we have is, our guys run for the most part, just like all long short guys do, is they run net long the stock market. So our risk is that the stock market goes down. So therefore, I'm going to buy 10-year bonds because history has shown there's a negative correlation between stocks and bonds. So if the stock market goes down, 10 years will go up, and I'm going to hedge it with that. I'm like, dude, you're doing it. That's exactly the wrong thing to be doing. That might have been true before, but it's clear as hell to see right now.
Right. The
risk to stocks here is interest rates going up, dude. Not only from the math point of view, but from the psychology point of view, right? And he doesn't see that part because he doesn't understand that part because he's not a trader. He's a mathematician or whatever. But I'm like, you're doing it wrong, man. If you want to hedge tail risk right now, the hedge is to be short TLT, man. I'm sorry. That's just where it is. And don't look at me. Don't believe me. Just look at the market. The market is telling you that, right? It's clearly telling you that, right? So that's what I think you do. And if you really want to get into the whole macro of it all, that's not going to work, dude. You know what I mean? Like, just simple as can be. Like, there's a huge Ponzi scheme that has gone on here, right? Where we have printed money. The government has printed money and used that money to buy our own debt. Like, it's nothing but a Ponzi scheme, right?
Yeah.
So is that Ponzi scheme going to unwind? I'm a believer that all Ponzi schemes unwind, right? Yeah. I'm a believer that there's a limit based on the rules of physics. There's a limit to everything in the world, in the history of the world, including how much money the U.S. government can print. Now, does that mean it has to happen this week? No. Does that mean it has to happen this year? No. Does it even mean that it has to happen this decade? No. Right?
Right.
But it could, right, is the point. You don't know when it's going to happen, but the markets will know when it's going to happen, right? Because you'll see it. They'll come back in and they'll do QE again, which is where I think we're heading, right? We're heading to a market that's going to force these guys to do QE again, right? So when they do, that's going to be the key to everything to me, right? Because if they do that and it doesn't work, right?
Stocks will get crushed. Yeah.
We're gone at that point, right? Gold bars and guns is all you got left at that point, truthfully. Is that really going to happen? Hell if I know, but it makes sense to me that it could. I think the probability to me is a hell of a lot higher than zero at this point, right? And I was there in 08 when they did the QE, and I worked at a multi-strat hedge fund that managed billions of dollars in 08 when they did the QE. And people forget it was a new thing back then. Nobody knew what it was, and everyone thought it was bad and bearish, right? And so they were selling into it, and that's why the market, to me, just kept rallying in their face. I watched it. Okay.
Wow.
They were selling into it, saying it was bad. Okay. Now they think that it's good, right? So they'll do QE and everybody will buy it this time, saying, oh, well, they're coming back in. The Fed they're coming back in. Okay, great. But what happens if it doesn't work? Then there's nothing. You have nothing left at that point. Then the more you print at that point is just bad, right? So to me, that's the danger we have. And I got to tell you, I bought gold bars this week, which I've never done.
Good.
Which I've never done before, Am I
told my father to buy some gold bars.
Yeah, am I right? Am I wrong? I don't know. Does it happen? Does it not happen? It's always been a bad bet, right? The end of the world bet, the end of society bet has always been the old man curmudgeon bet, right?
Right.
And it's never worked. And now I'm an old man curmudgeon, and I'm putting that bet on. But I think that there's something to be said for it right now, because if bonds, I just think this bond thing is so bad, not because of the fundamental that the government has issued too much debt and all that shit, and yes, but even if we just throw that out, just from a positioning standpoint, you've had the most money going to fixed income funds this year that you've ever had in history.
Right, they're wrecking the banks.
So to me, that's going to get crushed. Right? That's how I start all of my analysis, right? So if that's going to get crushed, that means bonds are going down, interest rates are going up. And if bonds are going down, interest rates are going up, then there's going to be freaking trouble ahead.
Yeah.
That's all I know. So
trying to bring you back to your happy place.
These are sad conversations to have. It's funny because the guy that I bought gold bars, I had a friend who I worked with years ago who was always like this, right? He's just an always end of the world guy.
Yeah.
And making a bunch of money, and he was always buying gold bars. And so he had like the people that could sell gold bars at the right price without, spreading on. So I called him up 2 days ago, and I haven't talked to him in probably 2 years. I was like, yo, man, who are those guys that I can buy gold bars from? You got the number? He's like, oh, yeah, yeah. And I got to talking to him. And I mean, after I got off the phone, I was like, Jesus, man, I thought I was bearish and depressed before I got that conversation. This guy's like 20 times me. He's like moving out of the country. He's like moving to some freaking island in Fiji.
Silo. Yeah.
Yeah, he's like, I mean,
guns and ammo, man.
Yeah, he makes me look bullish. But, you know.
Yeah.
Anyway, that's a whole
No,
other
I just want to kind of go over one of the things that we wanted to ask you is how do you position your trades, like max trades for your portfolio? Is there a certain limit? We understand that you have a 70 basis point on your portfolio that you have for your stops. In terms of number of contracts and liquidity, we're curious on how you proportion that in terms of risk management.
That's it. 70 basis points a trade. So I know what my entry is. I know what my exit is. I know what my stop is, I should say. So if I were to get stopped, then I'm going to lose 70 basis points of my portfolio on that trade. So that's how I size it. I back into the sizing based on where my entry is and where my stop is.
When you're doing your entire portfolio, say you have 10 candidates, right? Do you size your number of contracts based upon those 10 candidates for your entire portfolio, or do you just say, okay, this is the amount of liquidity by contract that we look at in terms of, hey, this is the max amount that I'm going to go to?
Yeah. So as I build a portfolio, one trade, okay, 70 basis points, right?
Right.
And clearly, as different trades get put on, right? As an example, if I get long NASDAQ, okay, I'm risking 70 basis points to the stop. But now let's say for whatever reason, I get a signal, I get long S&P and Dow and Russell, right?
Right.
Well, then 70 basis points to the stop is not 70 basis points to the stop. That's more like 4 times 70 basis points to the stop, right?
Right.
So I will then shrink those sizes. And that's an extreme example, but that's what makes it good, I think. I will either shrink those sizes or I will look for an offsetting trade, an offsetting correlated trade, negatively correlated trade that I can put on to hedge that. It's one or the other, depending what's available. If there's a negatively correlated trade available, then I'll do it. If there's not, then I will usually just shrink the size of each individual trade. And, I go back and forth with this one because there's an argument that if I'm getting a buy in all 4 of those things, then the signal is probably that much stronger. Right.
Yeah.
So
I didn't even think of that. Like, if you got the Russell, you got the S&P, the NASDAQ, and the Dow all in alignment for a down day, I didn't think about them being correlated somehow together.
Yeah, I mean, clearly the stock market's a stock market, but so I'll shrink it because of that, because it's so correlated, right?
Yeah.
I'd probably won't shrink it all the way down, but I'll probably shrink it in half in those situations.
Now, as far as your hedging process, how do you go about thinking, okay, now I need to hedge against this because I've assumed too much risk in a particular trade?
I'm just looking for things that are negatively correlated. Like if let's say we were to do it now, right? And I were to get long all these stocks, right? Then just looking at what the market's been doing, I would probably be looking to hedge by shorting bonds, I don't do TLT, but if I did, I would be shorting the TLT, or in my case, I'd probably be shorting the 10-year Treasury bond or the 30-year Treasury bond against it.
Oh, everybody's talking about TLT and wanting to get in. I mean, like gangbusters. But when I'm looking at the 20-year, I'm not seeing it. I'm not seeing it at all. I'm seeing in terms of the table, we did programmed the commitment of traders by commercial, institutional, retailers. And this is mixed. The institutional, according to the table that I pulled from TradingView, says 86% short, and retail is 56% long, right? So it's in the commercial and the retail are aligned. So according to your rule, it is when they're mixed like that, you don't play. Is that the case?
That is the case, and it's also the case that when you're looking at those large speculators right now, a lot of that long is bullshit. Because there's a huge contingent of hedge funds for the last 6 months that have been playing the basis trade. So they are longing cash treasuries and they're shorting futures against it. So it's showing up as that they're hugely short futures.
Wow.
But I happen to know they're really not hugely short. They're just playing the basis trade. And if you break the COT down into asset managers only, you'll see they're actually very long bonds. And I'm sure you've seen it on my videos, but I've been pounding for the last 5 or 6 months that TLT is in a lot of trouble.
Yeah, and I've the only one that I had that was kind of measured up on one side, and that was short, was the 10-year. I had 62% institutional and 61% retail.
Yeah.
And it's still not showing me anything in terms of going long yet. Is that the case with you too?
100%, yes.
Yeah. I love math. I just want to let you know I absolutely love math. And when we use this the COT, which you taught us basically through your videos, Dr. YouTube, we were able to put this together to not only look at futures but also look at forex pairs. So we do the cross pairs too as well on the COT.
Smart.
Yeah. And
certainly what it's going to show you is you want to be long Aussie versus all these other things.
Right. Yeah, it's
if you look, the Aussie hasn't even made a new low versus the September low yet, whereas certainly the euro has. The yen is right there. The pound certainly has. I mean, really,
the pound is just going down.
The trade you would have on here if you were doing a COT cross like that is you'd be long Aussie versus pound.
Right.
And that has been a pretty damn good trade. I haven't even gotten the signal to buy the Aussie yet, so I've just been short pound. But at some point, I'm going to be getting long Aussie here.
And this leads me to my next question in terms of gaps. I used to, a couple of years ago, I'm okay with auto trading. I'm not okay with auto trading anymore because of the gaps. I'm so fearful of the gaps in a black swan event that we're going to have something like the gilt when it did last year. It's just dropped significantly over the weekend, and it crushed whoever was on the opposite end of that trade. So these right here, what we do for Forex trades, they're weekly trades, and I basically go through a count. I don't know if you've seen any of my videos or whatever, but I look at the direction, I look at the FTM or follow the money, and then I look at the crowding. And if it's all three of them that are in alignment, then I go for these. And the ones in red are shorts, and the one in green is long. And currently not doing too bad on one standard lot.
Okay, sorry about that. I can't miss the end of fast money every day.
No, it's okay. It's okay, and that leads me to my next question in terms of news sources and categories. I know all of the different types of futures that you track and all that. How do you categorize or source your news sources to make sure that what you're getting as far as information is distinctive for a market turn or worthy of a market term in terms of validity?
I mean, it's usually pretty obvious. It's easy, obviously, to track the news for the financial stocks, bonds, currencies, and all that, right? Even energies is pretty obvious, right? The news flow is pretty good. Grains, few and far between, but they do have grain reports that come out. Some of the other ones are a little bit tough. The softs, cocoa, orange juice, that's usually pretty tough because not a lot of people talk about them. But the point is, when they're being talked about, that's when, there's a high probability that it's over. So, you start to see a bunch of news on orange juice and cocoa and whatnot, and it just sort of raises a flag.
So where do you go to get your news, if I may ask?
I mean, I'm watching it on TV or, I track the numbers as they come out, all the economic numbers as they come out, which, which is easy to do.
So like those calls and stuff,
or I'll just search, I'll search if I'm looking for something that's a little more esoteric, I'll just search the internet for news on whatever, and some of these web pages have it,
I'm always worried about the news not living up to, what do you call it, truthfulness. It's like, hey, how do I know I'm getting bad?
No, it's true. You got to be a little cynical about it. That's for sure. But I really like the news, the data. You can't argue with the data. Here's the data. Here are the expectations. So it either beat expectations or it didn't. And that's either bullish or bearish.
Oh, that's good.
That's really more how I.
How does in your analysis approaches? I've seen you paper trade some other folks' approaches and all that to confirm yours. In a couple videos ago, you were saying that you were paper trading these just to say, okay, now I know why I stick to my process. It validates my process because if I trade this way, it goes against my process and my discipline. So I'm just curious as how many different types of processes or systems that you go through in order to confirm or validate what you're
no, it's just been recently. I haven't had a lot of trades to do in the last 6 weeks. So just out of boredom, I'll sit here and I'll just I don't know. I'll day trade. I'll do bullshit, but I won't do that with real money.
Yeah.
But just to break up the boredom, I'll just kind of do it just to break up the boredom.
Right.
And like I say, it helps me to realize just how much I suck at that, and therefore I shouldn't do it.
Yeah. It's one of the things that, it's hard in terms of trying to balance for us, trying to be more efficient and effective and learn and be a lifelong learner and continue to, manage the ego and be humble and be open to different ideas, yet, stick to a process. There's a I don't know, a kind of a fight there that is difficult to manage there. A shiny object, as it were. It's like, oh wow, okay, you got this new thing here. I want to see how it goes in terms of back testing and all that kind of stuff. So
yeah, I mean, I at this point do one thing, and I'm not looking to do anything else. It's worked for me. It does what it's supposed to do. It creates the return stream that I have promised my clients it would create. So that's what I do. And if it stops working or whatever and just starts sucking from today forward, well, then I'm most likely just going to retire at that point anyway. So I'm too old to start all over again,
Right, brother. I retired this year, and I just want to tell you, it's wonderful. Every night is Friday night, and every Saturday, every day is Saturday. So you just kind of let you know that. And awesome. I trade in the mornings for fun with these guys, and it's a good time. One of the things that I was looking at here in terms of institutions, do you have any institutions that kind of target you as far as stop hunting and saying, oh, okay, Jason is kind of going on into this with a large purchase or whatever? Does specifically about your stops, like are they hard stops at the daily low, or are they mental stops where you phase in and phase out?
No. If I buy something on a market turn and the market closes on a new low, then I'm out.
Okay.
If I'm picking a market turn, it's a new close, well, then by definition, I didn't pick the market turn, right? So I'm out. It's that simple. They want to stop hunt me. They want to close a market on a new low because Jason Shapiro is going long. Well, good luck. If it's a new low close, I'm out.
Well, if you're buying thousands of contracts and all that, and you put your stop in there, they can see where your stop is at. Is that correct, or are they?
No, I don't put my stops in. I'm watching it.
Oh, okay. Yeah, and that's what we kind of figured here in terms of overall phasing in, because you mentioned that before in the previous videos, how you basically kind of shift out of a particular position or even get back in if the market conditions are favorable in that sense.
Yeah, no, I don't like put them in the machine or anything like that. I just, I'm watching it, and if it's 5 minutes before the close and we're through where I need to get stopped, then I just start getting out,
Yeah, well, that's good. It's going to your discipline and distinctive habits, as far as your process and how disciplined you are. I know a lot of folks will have like music in the background. Do you have like Guns N' Roses and Metallica in the background? That kind of thing? Or no? No?
I should.
You were in one of those podcasts, and the guy said that you went to a GNR concert, and Axl Rose was actually there. I can't believe that. I thought he bugged out a long time ago.
It's funny. I went with my wife to Europe this summer, and we stopped in Spain, and then we went to Sweden, and then we went to Norway. And I knew that Metallica was going to be in Sweden, so I bought tickets for it. They were going to be there literally in the days that we were there. So I bought tickets for it. But we got to Spain, and we were going because my stepson was going to be there for a few days in this weird little town called Vigo, Spain, which is on the Atlantic just north of Portugal.
Right.
And so I didn't make any plans because I'm like, we're going to be there 2 days and we're going to be with him. That's the whole reason we're going. I didn't look for anything that was going on. But we got there that night, went out for dinner, and, there's like a promenade on the water and whatnot with all these cafes. And so we just sat there. And all these people are walking around. It's like 5 o'clock. And I can't tell you how many dozens of people are walking around with Guns N' Roses T-shirts.
Nice.
My wife's like, look at all these Guns N' Roses T-shirts. I'm like, what the something's going on. So I went up to one group and I was like, why are you guys all wearing Guns N' Roses T-shirts? And like, oh, they're playing tonight at the soccer stadium in 3 hours.
Wow.
So I was like, no shit. So I went online and I bought tickets. I mean, dude, think about what would it cost you? Where do you live?
I live in a post, Fort Leavenworth, north of Kansas City.
Okay. So what would it cost you if Guns N' Roses showed up at, Royal Stadium or whatever?
Oh, yeah.
And the day you wanted to buy floor seats 3 hours before the concert.
Thousands.
It would cost you $1,500, $2,000, right?
Right. Yeah.
I bought general admission floor seats in the first part of the floor. They broke them into two, the front and the back.
Wow.
General admission front floor seats for $90 a ticket.
No.
Yeah.
Wow.
Yeah. 2 hours later, I'm sitting 20 feet away from Slash.
Holy smoke.
Or I should say standing 20 feet away from Slash.
One of the best guitar players ever.
Yeah, he's good.
Yeah.
So, yeah, it was cool. Europe is cool for that stuff, I mean, you could fly over there and get a ticket and go see the concert for less than it costs you to go buy a ticket for a concert here.
No, that's amazing. That's absolutely amazing. And,
yeah, they ripped for about 3.5 hours that night.
Wow. And Axl was actually on the stage.
Axl, Slash, and Duff were all there.
Wow.
The three.
I wonder what pulled him out of retirement. That'd be cool.
I mean, I would have to say it's green and it folds would be my guess.
Yeah, that's especially in this economy.
Yeah, I mean, those guys make a shitload of money.
Yeah, they're doing well. In fact, they got a concert coming here to Kansas City here pretty soon.
Yeah, for $1,000 a seat.
Right. Yeah.
Like, I love all these bands and all that, and it's fine, but I don't do that. I can't bring myself to do that. I just can't bring myself to do it.
Well, at least you got a once in a lifetime shot there to experience that concert there.
I mean, for $90, sure.
Yeah, that's crazy good.
If it was going to cost me $1,000 a seat, I wouldn't. I quite frankly wouldn't have done it. I can't do it.
Think of which, in terms of family, how do you do the family trading balance? How does that work?
I think my wife
is that too hard? You can pass on that. That's okay. I don't want to get anybody in trouble.
No, I mean, all my kids are grown and gone, right?
Oh, okay.
So those relationships I already blew up because of the whole trading, balance.
Right.
But now it's like I have it set up where I'm sitting here in my house, and right over here is the living room. I
perfect.
turned what was supposed to be the dining room,
right,
into my trading room, and my wife is standing, 20 feet away, and she's at her easel. She paints.
Oh, that's wonderful.
So we kind of, she works during the day, but at night when I'm sitting here doing my bullshit, I'm always 20 feet away from her anyway. So
that's cool.
That's kind of how I do it. I just made it a part of my life at this point. I don't have an office. I don't have people working for me. I did away with all that stuff.
I do like the breaks on the weekends, especially with futures and forex. Cutting out. And the stock market and all that kind of stuff gives me some time with Ping and my wife, and I do value that time and all that. It's
absolutely.
This does suck a lot of time, from that family time and all that. But
it certainly could if you let it.
Yeah. So I want to put as a last bullet, is there anything else that you would like to just kind of put out there as, because one of the things that drew us to you was the fact that you're a stand-up guy, you're upfront, you're humble, and it was nice to get this, hey, don't follow me. If you follow my trades or whatever like that, it's like, this guy's trying not to sell you any kind of course or anything like that, but he's also trying to teach people, which I thought was very nice of you, and I that's kind of the reason why I connected with you on LinkedIn and all that, was your approach to this in terms of trying to leave some kind of legacy. Are you trying to teach as many people as you possibly can here on your style of trading?
I mean, I appreciate you saying that, because that really is what this has turned out to be. This wasn't a planned thing, This whole crowded market report thing started because some people were approaching me after I was in Schrager's book, asking me if I could help them, asking me if I could teach them, telling me like, hey, I live, 40 miles from you. I'll come and make you coffee every day. And, what am I going to do so you can mentor me? And I wanted to do that. As you get older, that's what you want to do, right? And when you're younger, all you're thinking about is yourself, and I want to make money for myself and all that, right? When you get older, you start thinking more about what can I give back,
Right.
But, the problem was I was having hundreds of people contact me, and I was like, I can't help hundreds of people at the same time, because I have a family and I have a business. And I was telling people that, and one guy said to me, well, why don't I start a web page, or we could centralize this, and then we could do that. So he did. I got very lucky with him because he's a real stand-up guy, and he's very professional about it, and he's done a really good job. And so, yeah, people have come on there, and it's not so much that I'm trying to teach them about my process necessarily, right? Because I think no matter what process you use in this business, and almost for anything in life for that matter, but it just shows up so much in trading, it's all about certain themes, discipline, right? All this type of stuff, right? So I'm really just trying to show people that that's what this is about. And yes, they see my trades. Okay, every week I do a newsletter, which really, that newsletter is part of my process. On the weekends, I write that for myself, and I have for 20 years, right? Here's the trades I'm looking at. Here's the situations in which they will be triggered to do, right? It's just to keep my process and my discipline, right? So I share that now. And so they can see what I'm doing. And then they get on, we have a Discord page, and they're like, hey, you said you were looking to buy this. If this happened, well, this is happening. Are you buying it? We'll talk about that. And yes, they can see my trades. And if that's what they want to do, that's what they can do. And I understand why they think that would be a good thing to do. I have a good track record, right? I've made money, so why not just
track record.
Okay, so why not just follow what this guy does and make the money? And I get that. But the truth is, it doesn't work. It just doesn't work like that, right? It doesn't work like that. Right. It'd be nice if it did, okay? Yeah. But it doesn't. You can't follow someone else's trades, no matter how good they are. Because, like, for my stuff, for example, over 60% of my trades lose money, which means there's a good chance you get 4 or 5 trades in a row that lose, right?
Right.
And I can tell you, I always say it. It's like, so we'll take a trade, okay? Let's say you're risking 1% per trade, right? We'll do a trade. It loses. You'll lose 1%, right? We'll do another one. It loses. You'll lose 2%. We'll do another one. It loses. Now you're down 3%. And now you're like, oh, this guy Shapiro is full of shit, man. I'm not going to keep doing this, right? So the 4th trade will come up. You won't take it. I will. And it'll make 8%. So now we're 4 trades in. I'm up 5. You're down 3, right? And now you're never going to catch up to that, right?
Nope.
Because you're not as familiar with, and you haven't done this kind of trading as long as I have. So you're not as comfortable with it. You didn't develop it, so you're not as comfortable with it, right? And so it's just never, it's never going to work. And I see people it's funny because I see it on my Discord all the time, where you fall victim to this. And I only know this because I have fallen victim to it, right? And learned from it, okay? And they haven't yet because they're just getting involved with this. But we've had this trade recently. And I'm like, what happens is, so now, okay, you have a trade, you look at COT. You've never looked at COT before. You learned about COT because of me. So here's a COT trade that's set up, and it works like a monster, okay?
Right.
And you think it's the greatest thing in the world.
Yep.
So now you're going to think every COT trade is going to be the greatest thing in the world. And you're not going to be patient. You're just going to want to put it on. You're going to want to put it on. You're going to want to put it on because you don't want to miss it.
Without confirmation, no.
Yes, and I see people doing it all the time.
Right.
All the time. We've had this set up in heating oil. And I keep telling these guys, man, there's no confirmation, dude. Don't get in the way of this. I'm telling you, dude, I've been on that side, man, and this shit will run your freaking ass over, right?
Right.
But they're not listening. Every time heating oil ticks down for half a day, they start selling the shit out of it and shorting it, and then they get stopped out at the high, and then it goes down again, and they short it again, and it's down. I'm like, okay, so now you've done this 3 times.
Right.
You've lost 3%. I've done nothing. I've lost nothing. So now we're trying to do the same exact thing as you're down 3%. I'm flat. Like, it's not going to work. I beg these guys, don't come on here to do that. Don't come on here for this to be a tip sheet. Come on here because not only me, but now we have hundreds of people, some of whom are very experienced traders and some of whom are new traders, but we're learning from each other. And if you want to learn from me, the thing to do with the trades that you see that I'm making is the winning trades are easy, but look what I'm doing with the losing trading. Learn from watching a guy live time, what he's doing. Learn from that. The best place to learn is from what you're doing, but if you can also learn from what other people are doing, then that just hopefully accelerates it, right?
Right. Absolutely.
So that's what I tell them. Come on and learn about these things which are important so that you can be a better trader, not so that you can copy Jason Shapiro. Because first of all, Jason Shapiro ain't going to be here forever, even if that worked. What are you going to do when I'm done, right?
They're going to look at your videos.
Okay, but in the meantime, develop your own thing so that, like we say, I'm trying to help people learn how to fish, right?
Right.
I don't want to give them fish to feed them for a day. I want to help them learn how to fish to feed them for life, right?
Right.
And that's what this has been about. So I appreciate you saying that, because that's exactly right. Well, I'm not here to tell you, hey, I'm going to turn your $10,000 into $1 million in a year. You know, I tell people, like, if that's what you want to do, then by all means, there's hundreds of guys out there that do that. Do that.
Right.
And when you learn your lesson that you got raped because that's not possible, and that you lost money from it somehow, even though they showed you that 90% of their trades in history have worked and they've turned, they've turned everybody into a millionaire. When you actually get into it and you find out that that's bullshit and you lose money, and if you're still interested in trading after that, then come to us, okay? Because you need to learn those lessons first before you're going to come to us, right? I like to say we're the real thing, okay? Yeah. So it doesn't mean we can guarantee you that you're going to make money, but I can come close to guaranteeing you that I'm going to, if you listen and if you learn, you're going to become a lot more disciplined. And I look at the market a little bit different than other people look at it anyway. So you're going to learn sort of a new way, whether it's the right way. It's the right way for me. Whether it's the right way, only time will tell. But you're going to at least have a different view of how markets actually work, right, than what has been passed to you through all this mass media crap, right? And that's going to help you. So I just think that all these things will help you if you allow them to, right? So that's really what we're trying to do with our thing.
I think that's awesome there, Jason. I'm honored and humbled to meet you and talk with you, and I really appreciate your time on this. And I wanted to also share with you, because I think that was an important thing that we developed in our small group here, something that kind of mirrors market turns. And in this indicator, I'm just kind of show you the layout of it. Like I said, I programmed this by accident, and I found that this is a daily chart of heating oil, right? And basically what it does is it measures the open to close and compares it against past candles and measured moves of a value in one direction, right? So if like this right here is a red candle and has a green FTM, that isn't a market move yet. That isn't a turn yet. And as you can see, the next day it went up. This, however, right here, I got a red candle, showed the entire value of that candle against previous candles that had. This was a market turn on heating oil, and that was on the 15th of September.
That was the day I would guess that.
Did you go short that day?
That was the day that Russia came out.
Right.
I believe. Yeah.
Yeah, and so we went short on this one, and as you can see, that was not bad for one contract on heating oil, and that's day 9 right here. And I don't know if you move your stop to break even after like a 1 hour move, or you just wait until this goes.
I don't move my stop.
You don't move your stop. Okay.
But I'm not short heating oil either, so.
There was another. This was also a down candle, but green FTM. It means that this move valuation in terms of how it moved price from one to the next was pretty significant, and it overshadowed this one. Mm-hmm. The next one on the FTM was red candle, red FTM, and it went down 2 days, right? And then what it showed was a green FTM, which showed that it ran out of gas, and so we basically got this day and this day on this short with crowded out 77% on institutional and 67% on retail. So this is how I kind of what I would say integrated your process into my process as far as these market turns in terms of overall candle valuation and strength, either upside or downside. The wicks don't matter. It's only based on open and close and how much the market has actually moved in terms of money flowing into that particular commodity and flowing out of that commodity. Nothing else matters at that point. So that's how I came across it. The beauty of this is that I thought that this would be a red FTM. What it did was it highlighted to say, hey, no, wait, this isn't a market turn yet. This isn't a market turn. This is a market turn. This is a market turn. And it was able to say that now this is in alignment with the crowded out here, and these guys are just getting squeezed. The institutional retail guys are getting squeezed. So in kind of your approach to share and all that, we would like to share the FTM. I don't know if you use TradingView or whatever, but I can share my layout with you. And we just, it's something that, hey, I don't have to watch the news. I can kind of look at this FTM, this red FTM, and saying, okay, now I can go short because this is all in alignment. Now what I do goes, I think Euro was the other one too. Yeah, Euro. Everything is red. Everybody uses RSI and all that kind of stuff. That's what the red background is or whatever. But when you're looking at red FTM, red candle move, as you can see, this starts to make its actual move. Now, if this red FTM is shorter than this one, then I'm out. So it's like a 1, 2, 3 punch out, and that way it just it minimizes any kind of retracement or going in the other direction for that. But COT has been very helpful in identifying these going forward. And I would probably say out of all of these trades that I have that are in there, and I can kind of show you here as far as this is concerned. With the crosspairs, I look at, like I mentioned before, this table is basically the weekly valuations of the candles by currency, and I've included Mexican peso, South African rand, gold, and oil. But as you can see, the dollar's just been on a rampage for the past 10 weeks. And like I said, this is a weekly trade and all that. And if I look at the quote currency or the base currency, if like US dollar is the strongest out of the entire move at 1,081, I go find the weakest, which is US dollar Swiss franc. And if it's in the quote currency, let me go to US dollar Swiss franc. Well, what you see here is an incredible move up, right? So if it's in the base currency, right, this is the strongest and this is the weakest. This is the kind of move that you get, right? And it goes the same in the other direction. If the euro is weak and the dollar is in the quote currency or the second part in terms of currency strength, as you can see, major down pressure in terms of futures valuations going forward and currency strength. But what I have done, just to kind of make it quick here, is that I wanted to show you that I used the FTM along with the commitment of traders to get into these actual trades. So I got a red candle, red FTM that's higher than the previous red FTM, and I've got crowded out short. Well, it's crowded out long at 71% long institutional and 51% retail, and I go in usually out of 3 count would be 3 standard lots, so 1, 2, and 3, and this is where we're currently at on 1 standard lot with just 1, 2, 3, 4, 5, 6 trades. Not too bad. So what I'm saying is that this FTM helps kind of support any kind of a market turn. You can see that it turned right here. This was the market turn with the red FTM. You had a red candle, green FTM, that wasn't a market turn. You got a red candle with a green FTM, that wasn't a market turn. You got a red candle with a red FTM 3 weeks ago, that was the turn. And nice. it without having to scan, I'm sure you scan like hundreds of news events and that kind of thing. I don't need that. And in terms of my process, I just look at the FTM and I'm saying, okay, this is an actual market turn. And if this is helpful to you, I'd like to offer it to you and give it to you, just so that you can use it, use or lose it. That's the kind of thing. Is that if you wanted to use it, that's fine. If you don't, that's fine.
Oh, thanks. I wouldn't know what I would download.
Are you on TradingView or you use something else?
No, I'm not on TradingView.
Oh, okay. Well, this is what I use on TradingView on the premium site, and it pulls in the commitment of traders. It doesn't pull in all of the stuff that you have, so that's why I'm going to go ahead and subscribe to your channel and all that, because I can't get some of the on TradingView. I can't get some of the futures there, like Norwegian Krone.
I'll say this: if you're on our site, then and this is really what we end up trying to be about, is that there are, I don't know how many hundreds of people we have on there now, a few hundred people. And there are guys that are pretty competent at this stuff, and you could probably share it with them, and they can probably improve it or work with you and improve it with you and do all kinds of shit, man. I see
that'd be great.
There's guys on our site that are doing that things together all the time.
That's wonderful. Yeah,
I know, because they talk about it all the time, and they're putting shit together like this all the time. And this is a big question with a lot of people. Is can I just combine the COT with some technical indicators, and will that work? And I'm always like, you should do that. You tell me. I don't know. You know what I mean?
No, I've been very successful since the start of applying the COT with that. It was almost it was this summer, actually. It was like an eye opener. And what we did was we started programming COT polls. It wouldn't poll something like Norwegian krone or the Polish zloty or any of the Swedish krona or any of those kind of rare currency pairs that are exotics, as we call them. But I think the CFTC has it on there, but it's kind of hard to pull down and through TradingView. So some things are available, some things are not.
Okay.
Yeah, but that's what
getting on there. These guys will be. They'll love that. They'll appreciate that, and they could probably help you improve it, and enhance it, and do all kinds of things because these guys are on to that shit. Like I say, I'm too old and set in my ways at this point. I do what I do, and knock wood to this point, it's working.
Well, you're younger than me, brother.
I know, but I've been doing it this way for a long time. It's been over 20 years that I've been doing it this exact way, right?
Yeah.
And I have a business where I have, people give me money to manage to get the return stream that I have shown them. So that's what I want to get them. People have problems with this viewpoint, and they don't get it, but there's a difference between what I do and what other people are doing. It sounds stupid, but people are trying to maximize their return, right?
Well, that's what you said it's all about, is profit and loss, right?
It is, but what I'm doing is I'm offering groups that have diversified hedge fund return streams.
Yeah.
Offering them another return stream that is going to give them alpha, right? Because I'm offering a positive return stream with negative correlation, right? So therefore, their efficient frontier is going to expand by including my return stream in there, right? So that's what my job is to do, right? As far as my business of trading goes, right? Would I do it a little bit differently if I were just trading my own money? Probably. Well, probably not, because if it was my own money, I would do the same thing. I would have a bunch of different return streams in my own money, and this would be one of them, right?
So
like I said, there's really no magic alpha out there. The only magic alpha out there is diversification across returns.
Diversification, yeah.
So this is what my thing does. It's very hard for people to find something that has high negative correlation and positive returns. And that's why they give me money, right? So that's why I do it the way that I do it, because I'm giving them what I am contracted to give them, right? I see trades all the time that I think are good, that I think have pretty good risk reward in them, but it's not what I'm supposed to be doing for them. So that's not what I do. I do what I do for them because that gives them the return stream, that they're looking for from me. I have a job. It's like football, right? Let's say I'm playing defensive end on a football team, right? Well, I can try and go inside once in a while and shoot the gap and get the running back behind the line of scrimmage and look like a hero on a certain play, right? But truthfully, my job as a defensive end is to keep the outside and drive the running back to the inside so that the linebacker can come and nail him, right? That's really my job as a teammate, as a defensive end, right? If I want to make the highlight reel, then okay, I'll go inside and I'll shoot the gap and I'll try to get the guy behind the line of scrimmage. But if I miss him and there's nobody on the outside anymore and he gets around me, then he's going for a touchdown, right? So like I'm looking at it like that. My job is to stay on the outside, man. You know what I mean? And it's the same thing with this. My job is to give them this return stream. And that's why they've given me money, because they've run my return stream against their portfolio. And they said, yeah, adding this return stream adds alpha to our portfolio. So that's my job as part of the team of people that they have managing money for them, right, is to give them this return stream.
Oh, that's amazing there, Jason. And like I said, I appreciate you, coming on to this Zoom call and spending time with us and give us a little bit of specifics on some questions that we still had out there from the previous podcast that we watched and all that. But you're welcome to come here every Wednesday. We have this Zoom beer call, and you just kind of want to, if you want to see what we're doing or anything like that, and you got some time other than paper trading, failed strategies and that kind of thing, you're welcome to come, man. We have a great bunch of guys that really want to learn and be more efficient and effective at what we're doing at trading. Because, like you said, trading is very hard. It's not an easy thing at all, and it's at best just trying to keep your money at where it is in terms of break even, and trying to stay away from losing equity there.
I mean, I'm just looking at our Twitter page, and all it says on here is learn how to stop losing money in the markets.
Right, yeah.
You
Yeah.
know? Like, I'm not here saying, hey, learn how to, be the greatest trader in the world. All we're saying is learn how to stop losing money, right?
Right.
That's the first thing you got to do, right? Once you can do that, then you can start talking about making money.
Making money, right.
The vast majority of people are going to lose money doing this. So let me help you at least stop that first, and then we can, and then we can take it to the next level, what I'm telling people.
Jason, I just want to say I really appreciate your time and all that. We've gone over the hour and all that, but your conversation was so interesting, and your answers, I mean, it's amazing. Thank you for your time. I just wanted to thank you on behalf of the team here. There's a lot more guys out there that are a part of this trading group that we meet once a week and all that. And like I said before, you're more than welcome to come visit with us. And we usually spend about an hour for our Zoom beer call and that kind of thing. But
I appreciate it. And you guys should, by all means, if you want to, join our thing.
No, we will.
I'm sure if there's a bunch of you, I would be willing to bet. I don't handle the business side of this thing at all. I don't really.
No, we're all interested in learning. Don't care about the business.
No, but what I'm saying is I would bet that if you contacted the guy,
and,
hey, we got 20 people that want to sign up, he would probably give you a deal.
Oh, okay. All right. Well, that's good to know too.
I don't know, but I bet he would. I mean, that's just kind of how he is.
It's been an honor learning from you, and just want to say thanks for coming here today and giving us these words of wisdom for us to go on up for. And I will sign up for it, and just look forward to the dialogue and continued learning on your website there too.
Awesome, man. Well, thanks, and it was great talking to you guys.
Yeah, you take care, brother. Have a good night.
All right, thanks. Yep, you too.
Well, if you like this video, hit the like Rumble button below and the subscribe button. And if you want more information, click the course information links below. On the TradingView link and on TC2000, I have an affiliate link. If you open up a TC2000 account, you will receive a $25 discount using that link. Thank you for your time.